Well, what I see is a repricing of technology-related assets across the board, whether it's some of the AI names, satellite companies, quantum computing stocks, and crypto has been part of that story. So it really hasn't been a crypto-specific sell-off. It's been a frontier technology sell-off. And so I see macro drivers behind that rather than crypto-specific.
But if we look at the sell-off in the NASDAQ, down about roughly 6% from all-time highs. I mean, we're down 30% in Bitcoin.
Modest for the big indexes and some of the mega cap names. You see much larger declines in Bitcoin and some of the, again, frontier technology type of names. And crypto is that sort of space. On the one hand, Bitcoin is a major asset, a $2 trillion asset. Much of the asset class, though, still early stage technologies. I think it's fair to characterize it. And it's definitely been trading with that part of the market. I think that has to do with concerns about the U.S. economy, questions about the Fed policy, much more than what's happening in crypto specifically.
Well, how do you see Grayscale or just crypto in general? Like, is it a safe haven? Is it a cryptocurrency? Is it a currency? Is it a commodity? Is it an asset? Like, how do you really define it?
Crypto is a $4 trillion alternative asset class today. So it's a mid-size alternatives category, and investors think about putting it in their portfolio in that way, alongside hedge funds, private equity, infrastructure bets. Crypto fits in that way.
With the same amount of risk or no, not necessarily?
It's definitely a higher volatility alternative, and it should be considered that way. But that fits very well for many investors with longer term portfolios. They're looking for many different ways to take risks in markets that don't have the same correlation with public market equity. Sometimes that means it outperforms stocks. Sometimes that means it underperforms stocks. It's been a great diversifier over time.
I know Isabelle wants to jump in here in a second, but I just want to get one more in, and that's on this conversation. The idea of some of the other assets that you mentioned, okay, if we're talking about alternatives, maybe we're talking private credit, maybe we're talking real estate. Sometimes those are hard assets like real estate. Sometimes they're assets that produce cash like private credit returns. You loan money to people, they give you money back at a higher interest rate.
You hope.
You hope. Yeah. We'll see if that happens in the future. With Bitcoin, that doesn't exist. There are no cash flows with Bitcoin.
That's right. So we call it the crypto asset class. We could call it the blockchain asset class because that's what it's all about. Blockchain technology, that's what stitches together everything in the crypto asset class, and it has a diverse range of use cases. Digital money like Bitcoin, digital finance applications like decentralized finance, stablecoins, tokenization, all the things we've been talking about this year. It is all of those different things, and it will compete in some ways with commodity markets. In some ways, it'll compete with equity markets. And so it is hard to give a tight answer because it is its own unique thing, a $4 trillion blockchain-based digital finance and money asset class is how we think about it.
So Grayscale is an early mover, actually, when it comes to offering crypto funds, namely Bitcoin and Ether. They scored a legal victory. That's why we have this very successful dozen or so Bitcoin ETFs that we have seen today. Ether ETFs, Dogecoin, Carol, Tim, everything, really. How has the proliferation of ETFs reshaped the market? And do you think it's for better or for worse?
Well, absolutely for better. I mean, it's broadening access to this asset class to a much wider range of investors and allowing them to access it in ways that's convenient for them with the same reason that they use ETFs for other purposes. You can include it in tax advantage accounts. It makes taxes easier. It makes estate planning easier. All of these reasons are why the ETFs have been so popular.
But what is your response when people say the whole premise of Bitcoin is to be decentralized? And now the biggest holders of IBIT is Harvard, although we know that's not really a conviction bet. It could just be because of basis trade and all of that. But BlackRock, all those big issuers, Grayscale.
Yeah, that's right. The premise is that Bitcoin mining, which provides the security for this network, is decentralized. And if for some reason that were to be questioned in the longer run, investors should question Bitcoin, because that's the thing that really matters, not who is holding the asset. And the same is for gold. Nation states hold gold as a decentralized asset for store of value, and they keep it in the basement of the New York Fed here in downtown Manhattan. So it's just convenient to hold it in this same place, the ETFs or gold. That's not what gives it its value. It's really Bitcoin mining that's core to the value.
I've actually seen some of that gold, by the way.
Have you?
I visited the Fed,
Wow.
years ago, and I got to go underground and see the gold. They wouldn't allow us to take pictures.
I bet they were allowed to see pictures.
I got to see the gold. It's there. I didn't count it.
Why not just buy crypto directly? Like, if the whole idea is this to be this kind of pure, straight to it, very different from what the financial system has been, Zach. Why do I need you guys or anybody else who's kind of a middleman or middle individual?
The premise of this technology is taking intermediaries out of the financial system, and we are going to drive huge efficiencies in the financial system over time through tokenization, stablecoins, all these different use cases. However, there will be a lasting role for certain types of intermediaries, we think, including fund managers and others. And we are just providing a convenient way to access these assets for many types of investors. Again, for taxes, for estate planning, for tax-advantaged accounts, it makes it much more effective. But self-custody, holding your crypto yourself, is a core part of what the asset class is all about. And we certainly would encourage more sophisticated investors that have an understanding of that to please go for it.
But don't for cryptocurrencies to have value, don't we have to really be using them to do things? And we're still, no offense, but I'm still, I don't know, still using dollars. So like, I'm just trying to understand, like I understand blockchain, like if you buy a house and you have, rather than, the ownership and so on and so forth is all there, the papers. I understand the blockchain, that value.
But that hasn't happened yet, by the way. Like we're still doing old school titles.
That's right. Thank you, titles. Monday brain. But I don't quite still yet the transacting that I will be doing. I think there's been research. We were talking about this on our call this morning, that it's still a lot of folks who want to keep things, under the radar, illegal activities.
You're talking about the New York Times story earlier with more than $20 billion of fraud alleged.
Yes.
Yeah.
I'm trying to understand.
So I think you're going to be using stable coins. And we had a lot of people are hearing more about this year because we had a key piece of legislation in July, the Genius Act, which provided a comprehensive regulatory framework for stablecoins here in the U.S. And over time, you will see many more payments use cases for this technology. You will also see stablecoins on corporate balance sheets. You will see stablecoins as collateral on the major U.S. derivatives exchanges. So you will see this dollar-based, blockchain-based dollars ubiquitous in our system relatively soon.
But if people are using, or companies are using stablecoin or stablecoins as collateral, aren't they just saying they're using treasuries as collateral?
Blockchain technology, again, is to take intermediaries out of the financial system.
But those stablecoins are backed up by treasuries, depending on where you buy it. But for the most part, if we're talking about the most well-known stablecoins like USDC, backed up by treasuries.
Yeah, absolutely. They
one for
are
one.
Backed one for one, and that is written in the regulation, and that's a very important piece of the whole story. If these technologies are going to be ubiquitous in the financial system, they need to be safe for consumers, safe for the financial system as a whole. That's why this regulation in July was so important.
So SEC Chair Paul Atkins last week conceded that he promised a token taxonomy. For the longest time, people have been confused whether crypto is a security or a commodity. And so this moves away from the fact that almost every digital token acts like a stock or something like that. How do you view that? Because the lawyers I've talked to, some viewed it as a win, but some didn't really.
So the Senate is working on legislation exactly on this topic, and I think will clarify a lot of these issues for investors over time. Look, Bitcoin is a commodity. It's a digital commodity, and that can maybe be hard to understand, but that's what it is. It's a digital commodity like gold or copper or silver. It's just in digital form. But there are other crypto assets that look more like a claim of some kind. And I believe we will see more of that it will be common for large corporations to issue tokens as part of their capital structure alongside equity, debt, preferreds, and other hybrid instruments. You will see tokens. And so there's a lot of different uses. It's all based, again, on that same technology, but it's hard to put one label on how these assets
I just feel like there's a bunch of smart people here and a lot of smart people at Bloomberg, and we constantly are having conversations like I feel like a toddler. Why? Like, why is this needed?
Well, that's why Zach is here to explain to us all the questions that we have that toddlers would ask. Hey, I mentioned political tailwinds, and one thing that I wanted to get your view on is obviously the regulatory environment is much better for cryptocurrency companies right now than it was during the previous administration. I mean, look at prices as, as a result of that. But the Trump family and the Trump family's connections to the actual crypto industry, how do you view that?
Look, it's not a crypto-friendly administration. It's a crypto-friendly nation or crypto-friendly voter base.
I don't know if I don't necessarily agree with that. Because and here's why I don't agree with it. And push back on this, feel free. But yes, a lot of the pro-crypto candidates won in 2024, but the messaging that the crypto community pushed in their districts wasn't crypto messaging. Like if you look at the ads for Bernie Moreno, who won in Ohio, it wasn't about crypto. It was about other issues that resonated with those voters. So I don't necessarily see it as a crypto-friendly nation. Is that what you meant by crypto-friendly nation? Like these people were voted in?
What I mean is that holders of the technology, users of the technology are bipartisan. That is a global asset class, and we see comparable things happening all over the world. That Democrats voted for the Genius Act and the Clarity Act that passed the House, and I think will again vote for market structure legislation in the Senate. And this is really a key issue for us as an industry, that it continues to be bipartisan so that any changes are durable and they last well beyond any one individual.
So essentially you're saying is it doesn't really matter. At this point, the administration doesn't really matter because these laws have been put into effect. It doesn't matter who SEC chair is.
In the long run, it doesn't matter because this is innovative technology that's going to transform the financial system. And how the politics shake out over time is hard to predict. But I have no doubt that in 10 and 20 years' time, that the technology and the assets will be everywhere in our financial system, and we'll have clean regulation. Everywhere.
And now you see Democrats as on board as Republicans were last year.
Increasingly on board, and I think that that's because their voters care about these issues. In our own survey data, slightly more Democrats hold crypto assets than Republicans. So we see it clearly as a bipartisan issue, and I think, again, you see that in the House and Senate also.
Zach, I do wonder, I know, Isabelle, you wrote about the coming IPO, and, I know you're probably limited in what you can say, but I do wonder about the market volatility that we're seeing, and this is a big week. We're going to get NVIDIA earnings, which will certainly play into the AI trade and enthusiasm or lack or pullback that we've seen in that. But will market volatility possibly change your timing on all of this and maybe delay it?
Yeah, as you know, I'm in a quiet period, so we're limited to what we can say, but as soon as we have more to say, we will offer that. Look, what I would say is in the longer run, I'm incredibly enthusiastic about where this technology and where this asset class is. I wouldn't spend all my time on it if I wasn't. And it's hard to predict the short term in any asset class. I think it's a very great long-term bet for many investors to allocate to crypto.
When will you have more information on the IPO?
TBD.